Is Hi guys, it's Bentrades from Zone to Zone Trading, and I just want to go through NQ on the session we had on Friday. Now, going into the day, we all gave our pre-market plans and we were pretty bullish before the news drop. After the news drop, we got a nice push down, and then we had a push up with the rest of the day with that bullish flow coming in. And then we got to our price target and came back down. So I'm just going to go through that. So I'm going to start on the 15-minute. Okay. So just a brief display of what we're looking at here. The thicker green line you can see around where the cursor is here. That's a daily demand we've got from around 16,465 down to 16,350. Now what happened is we were kind of hovering over here earlier in the morning. Had played from this 15-minute support. I had played longs up and I was held all the way to this price target here that was 16,414. Trimmed out all my runners at this point because it was just before the news drop as well. So that was kind of my price target. Wanted to get out of it, didn't want to risk it. Then we got the news drop and we got the push down. This is a daily demand that we haven't been into for a few weeks. So we kind of got that nice clean push down, cleared some liquidity that was down here, almost hit our hourly resistance that we wanted to down here at 329. Push back up, and what then happened is called this live in chat. We wanted to fade this candle. So the data we were looking at was bullish. The zone we were in was bullish. The candle was bullish. We didn't close below any support that we'd just broken or any zone. So what we did then is off this 15-minute support here, I will mark it out for you. So our first entry of the day after the data was on this candle here. So this candle here that wicked down onto the level. I don't often play news candles with futures. It's a bit too volatile. The spreads can get a bit crazy. Not really worth my risk. I'd made good money on this move before, so then I had some profit to play with. So what then we work with is we look for a nice retest of a level when it's all calmed down, which is what we got here. Our level at that's 364. And what we did is we played these longs all the way up. As you can see, we had our stop below this wick down here. So I usually gauge it with a few points below the wick. And as we start pushing up, that's when I move it to break even. As we're moving further up, I take a trim around, it must have been around here, around 16400. And as we push up, took another trim at 414, as that's my hourly resistance, a previous place that we'd rejected. And then we're into runners. Held these runners, and at this point, we then got market open around here. So this was top of daily demand. We looked for the retest off the open and then the push up, and that's what we got. So again, we're still holding our NQ runners. And if I show you on the 2-minute, it will show this a little bit easier. So if I go down to the 2-minute time frame in the open, okay, so as you can see, when we break it down to the 2-minute, you can see this price action a bit easier. That news candle pushed out of daily demand, immediately push back in, retest the bottom, push back in. This to me, bullish setup. Love this sort of setup. Gives us a defined risk. We know where the liquidity has been swept from. We know where buyers were present and where they started pushing up from. As we pushed away from that, we cleared our 15-minute resistance, our hourly resistance, and then as we came to the open, which was here. So this yellow dotted line here is previous close. Anytime we open above that, I like a breakdown, retest, push back up. We were already in longs at this point, so we're still holding. This confirmed it. We took our SPX calls off the open here. We trim them as we pushed up. Now, what I also do is I overlap my hourly zones with my daily. So if they're close, but they're strong enough, I don't mind them touching, overlapping, basically creating a bigger zone. Now, what I liked about it, if I just had the daily demand, it would have looked like we broke out, just retested the top. But then what this also gave me is people trade on different different timings. So our daily NQ traders obviously trading off this zone. Our hourly, you can see we push up, test the top of the hourly. We've got an hourly resistance there. Push back down, test the daily again, push up, hourly, still hold this, making a higher low. And then we get that push up out of the hourly zone. This is so the few things that we've had happen here, news pushes down, clears some liquidity, buyers step in, regain daily demand, regain resistance, and you can see the retest that we get on these levels every time. So we push up into the daily zone, get the retest. That's bullish. We break the 15-minute resistance, get the beautiful wick down. Again, that's another entry if you weren't in at that point. Beautiful push up. We then push up to our hourly resistance. As you can see, we come here, we reject it the first time, and then we push up, break it again. Beautiful wicks down, great entries, stops just below. Come up, push through, that's close. Push out of daily demand. Push up to the top of our hourly. Get that reject again, exactly what we want to see. Wick down, as if you look here, whilst we push back down into daily demand, the wicks push down, but we never actually got a body close within the zone. Also, another thing that I like to see to keep holding, pushed up, rejected it again. This is liquidity that's just trying to push it down again. Sellers that were still hourly sellers that are still up here that are still trying to push it back down from this candle. They fail that. Again, the bodies get even further away from daily demand and the bottom of the hourly zone. This 2-minute candle here, great to see if you're in longs for a retest. Again, another entry with a stop below. And then we get the clean push out. Live on voice, we're giving out our price target for this. This was I had two price targets. I had 47.20 on SPX, and I also had this hourly supply on NQ. So as you can see, we push up to our hourly resistance, this blue one here. This is a 548. What do we get again? We get the wicks pushing above, sellers step in, our hourly sellers push it back down. So keep holding. Again, beautiful wick to the downside here. Push back up. They're trying again. Now, this is why we use the levels with bodies, but also you kind of got to take this whole price action into account. It might have been a lower high, and obviously this is liquidity, but what we could actually see on Bookmap, and it was happening with SPX as well, the liquidity was sat just on this level. So they'd push this price down, we come up, and they try to push it back down again, trying to save their stops that are sat on the top of these wicks here. Pushes back down, buyers step back in, the bullish row keeps continuing, the deltas pushes up, and we get that push all the way up to our supply zone. First thing that happens is we push up to this supply zone, we get 2 wicks into it, reject back down to our hourly. Again, what am I looking for? I'm looking for a 2-minute close below the level, something we never get. We wick the level, push up. So we're just kind of chopping around this area, but we're never getting a close below the level. Push up into the level. Now, this is a great setup for shorts for me. This is something that I love to see. So what we got here then is we got push up into supply. We'd been wicking into it before, pushed up, rejected back out, still held around the bottom of supply. But then what happens here is we push up and no bodies are closing at the top of this range or above. So what happens here? We take our profit, we enter shorts. We've got a defined risk because now the wicks have only been to the height of the previous. So we can enter shorts here, somewhere around here. with a stop above these wicks. Tiny, tiny defined risk for the move that we are wanting to capture back down as we see those calls and those longs get unwound. What happened next? We push here, we wick back down, try to push back up, can't, try again, fail, and then this is when we get this beautiful move down. I would just move across, keep getting this push down. Wait, what happens? We break our hourly, come up, we can't close above it, break down to the hourly demand and our hourly support now. That's a resistance turn support. Bounce that. That's profit taking of hourly traders and just people that from that move down. Push back up, and then this is what we want to see. Strong candles breaking back into the zone. Something that we always want to see. So we get that push back down, push through the hourly zone, get to the daily demand. Where do we bounce? Daily demand, wicks to the top. That's what we want to see. Push back down again, making a lower low. Push back up again. We're failing the previous high. So all this structure is bearish and something that we want to see. We get our push down, and then what I want to draw your attention to here is something that I marked out on the day, but I've cleared it just because I wanted to draw it to you live. So as we've had this strong push up from the news all the way to supply, so if we go zone to zone and we're coming back down, what am I looking for? Am I thinking it's going to reverse all the way back down to the news? Yeah, but it's not likely. I'm more looking to see where we're going to retrace to and then continue a move back up. Now, what do we use for that? Fellow trader Hirsch Trades has just posted a video about this if you want to go see it on his channel. Great insight into added confluences that we use with our trading. We take the Fibonacci and we take the low of the news candle and we take it to the top of this supply where we wicked up to the top. So as we get up there, as we're starting to break down, I'm drawing this on there because I want to know where I need to start taking trims and where I need to start moving my stops to protect my position. I'm not going to risk this whole move down for the sake of this extra little bit to risk. It's not worth the risk. So what we then do is we draw our Fibonacci and we have the 50 and the 61.8. We like it when it ties up with daily zones, hourly zones, and this is exactly, we came down, bounced the 50, bounced the 50, broke it, came back in. Then what do we get here? 61.8. Come down, wick down, wick down, start to push back up. This is where I trimmed out of shorts, enter longs, defined risk. I didn't have it below the wick of the candle. I actually had it below the 61.8 because I thought we could get a wick down into this level to test it. And then we got another great push back up. This push back up again, where does it take us? Doesn't take us all the way back to the top. We're just pushing back out of that daily demand, pushing across this hourly level, indecision, indecision. We saw the positioning and the data start to change. Things were starting to look bearish here. We actually entered SPX puts and NQ shorts at the same time. We caught it around this candle here. It's a beautiful trade. So we'll risk it. We had a defined risk and then straight away we got that move. We start getting the first move down. Had this hesitation. Our data then told us that we were targeting even lower on SPX. I actually use SPX to trade NQ with as well. So I like to tie it in with my zones and levels and price action that I'm seeing on NQ with SPX and the targeting for what we're doing. It's something that we talk about live on voice every day. We talk people through it, what levels we need to break, what targets we're aiming for, where to trim. This is something that we do in zone to zone. So then I told everyone we're not going to stay here. This is when we had just broken 4,700. I said, hold these puts. We're going to go test 90. We've got this lovely move down, trims on the way down. Beautiful, kept moving down. My final price target for these NQ shorts was this 414. We managed, we waited, we held, we got filled perfectly, got out of this trade, and then from down here, This is where we started playing some longs. So we then started playing, as soon as we regained 414, we can then play longs, and we're also in SPX calls at this point. Rode this move back up,